There is no recession, but debt is rising much faster than GDP, and that means trouble. Let's talk about it all. Hello everyone and welcome to my YouTube channel. Thank you very much for subscribing. Thank you for leaving your comments below, for giving a like to this video and staying until the end. The United States economy has shown a surprising level of growth in the third quarter. However, there are important temporary effects, things that are not likely to continue, and in fact, some of them will revert. The first one is the massive increase in inventories. Obviously, that is not going to last until the fourth quarter and is likely to come down quite significantly. Furthermore, the rising consumption comes at a time in which real disposable income is falling, and therefore consumers are adding to their daily expenses by increasing credit card debt, increasing debt, consuming savings. So that is unlikely to last for a very prolonged period of time. Important things to remember in any case is that the third quarter GDP, if we look at the last year of GDP increase, it's basically increased by $414 billion with an increase in debt, public debt only, of $1.3 trillion, which means basically that the United States economy is really not growing, but it's disguised by a massive increase in public debt. This is not just a problem of the United States, because you will say, okay, let's move our asset allocation to the Eurozone or to Japan or to other economies. No, my friends. This bloated debt-driven growth is something that is even worse in the euro area. Why? Because the euro area, on top of it all, is not growing basically at all. And if we look at the latest composite PMIs, what we can see is that the reality of the services sector is that it's in contraction, as well as the manufacturing sector, both at worse than 30-month lows. What we have to think, therefore, is that asset allocation must continue overweight in the United States because of the strength of the dollar in an environment of monetary debasement. The world reserve currency improves relative to other fiat currencies, not because inflation isn't elevated in the United States, but because the debasement of the currency in other economies is worse. So we need to continue to be overweight the United States. Not just because of the macro conditions. As I mentioned before, at least it is showing some growth relative to other economies that do not grow, yet continue to increase massively public debt. But if we think about what to invest in, we have to have high exposure to the US dollar relative to other fiat currencies, and we must remember that the inflationary pressures coming from the commodity spectrum or the freight environment, the Baltic Dry Index, both are showing that inflation is a monetary phenomenon. Why? Again, as we always repeat in this channel, the Baltic Dry Index and the commodity spectrum have risen due to the conception of a geopolitical environment that is very risky, yes, which means that there's more money going to relatively scarce assets. Yet, the oil price and the Baltic Dry Index have corrected rapidly with monetary contraction. So, monetary contraction likely to continue, which means that the dollar is likely to be more scarce for all those economies that have increased their imbalances in US dollars, and therefore more demand for US dollars. Furthermore, persistent levels of inflation mean higher for longer rates, which is likely to continue even with geopolitical concerns. that means that we need to be exposed less to the cyclical sectors that have behaved quite well in this environment, because it's obviously going to show less of a positive impact from the macro and from the commodity spectrum. And also what we have to be is less exposed to emerging economies, less exposed to the Eurozone, because the underlying weakness of the economy, with the monetary imbalances, the weakness of the euro, and the worsening of the monetary imbalances in emerging economies, where they are not just suffering from way too high fiscal deficits, but also from a very imprudent monetary policy. So if you think about it from a monetary perspective, I will always repeat, we need to have gold. We need to have a little bit of cryptocurrencies. Bitcoin is being now a decorrelated asset relative to the equity and bond market. We need to have less exposure to the Eurozone, which is becoming more and more a troubled economy. Think about this. The Eurozone is showing very weak levels of economic growth and very poor PMIs in the middle of a massive next generation EU sort of stimulus plan. So move some funds to the United States, despite, yes, valuations are expensive, but valuations are expensive. Why? Because they deserve so. And continue to have gold, continue to have a little bit of commodities, but being aware that those commodities are not going to rise forever, that demand destruction kicks in very quickly. Continue to have exposure to those investment grade bonds that give you a little bit of yield, but the solvency and liquidity of the issuer is improving, not getting worse, like in the case of sovereign debt. Those basically are the elements that constitute what I would consider a robust level of exposure to a monetary environment that continues to be accommodative, where central banks are going to continue to be injecting liquidity in tough environments, but where the macro and the earnings environment is actually not working in the favor of taking way too much risk in the cyclical side. Keep defending freedom. Thank you for watching this video. Please subscribe to my channel, like my videos, leave your comments below, and keep defending freedom. Thank you very much.